Hello and welcome to another Impact Insights. I'm very pleased to have with me today Mark Todd, who is Key Account Manager for the South for Bluestone Mortgages. Hi, Mark.
Hi, Dale.
Thanks for coming in today and looking forward to this insightful piece. So Mark's going to go through the criteria and various bits of that Bluestone can do. And obviously Impact are one of the key Sapphire providers for Bluestone. So we're very privileged to have a very limited distribution and access to some incredible products. So Mark, if you want to go through a few bits, and then I'll chop in as and when.
Excellent. Yeah, thanks very much. Yeah, so I'm just going to go through a quick kind of criteria presentation for you guys. You've got a big understanding of everything that we do at Bluestone, and so you know exactly what type of cases Impact can help you guys with as well. And then, and following up, really excited to talk about our new 6 times income product as well. And as Dale has quite rightly pointed out, they are one of our kind of Sapphire exclusives. So it will be something that is only available through our Sapphire partners such as Impact. But without further ado, let's crack on. So first thing I want to talk about is adverse credit. Now, adverse credit is kind of the life and soul of everything that Bluestone does. There's lots of kind of specialist lenders and stuff out there, and they all kind of dilly in different bits and pieces. And it's kind of a broad term, specialist lending. You know, some people might say it's specialist buy-to-let, specialist adverse credit, and all sorts of lines like that. So I just want to make it kind of abundantly clear that our main bag is adverse credit, or as we like to call it, complex credit. Adverse always has a bit of a negative connotation to it. And as a general rule, we don't think that people who suffered kind of a life event or a blip should kind of have that negative stigma attached to them as well. Right, so a couple of key bits here. No credit scoring. So as I'm sure you guys can probably imagine, with most of our kind of applications and applicants themselves having been through life events which have caused them some complex credit issues, if we was to credit score them, we probably wouldn't have a lot of successful applications go through of us. So we do not do any credit scoring at all. We do a credit search so we can see kind of what's going on the file, and it is a soft footprint at dip stage and a hard footprint at application stage, but there is no kind of credit scoring limit. So don't be afraid if you're looking at a credit report and you can see it's a really low score. That's always something that we're going to be able to kind of help you guys with. Now, for those of you who are quite familiar with some of the other kind of complex credit specialist lenders, we all kind of work on a similar basis where we'll have different product ranging from kind of better adverse credit or to kind of slightly worse. So what we'll use to determine where someone's going to sit on our kind of product grid is predominantly based around the defaults in the CCJs. So we will look at up to 4 defaults and 3 CCJs registered within the last 3 years. Now, the key word here is registered. If they were registered outside that 3-year window, not when they were satisfied, just when they're actually registered, we're going to completely ignore those as well. So the other thing that we do with defaults and CCJs is anything less than £300 or related to communications, we are again going to completely ignore. So just to recap, 4 defaults and 3 CCJs registered in the last 3 years that are worth more than £300 and not related to communications, we're going to count. We've also got no monetary cap at all on these. Now, every time I do one of these presentations or I speak to people like Dale and stuff like that, they always get an influx of calls where they go, I've got an applicant who's had a default, it was £20,000, is that okay? Yes, that's absolutely fine. We don't have any need for any kind of top caps or anything like that. In fact, the biggest one I've actually ever seen was a couple of years ago now, and someone had an outstanding CCJ of just over kind of £264,000, which I'm sure you can probably agree is
tax bill, was it?
It was something similar story to that, but and again, that was outstanding, and we were absolutely fine with it. Once you've got an understanding as to what's happened there, we're all okay. Cool. Moving on. So DMPs, debt management plans. Now, these are kind of really commonplace in the market, and unfortunately, we're probably going to see a few more of these kind of coming into place just due to the nature of what's happening in the world at the minute, rising cost of living and everything. So I think it's really important that everyone has an understanding of how we'll look at these. So with us, debt management plans, we accept these and they can remain in place. So there's no requirement for them to have been cleared on completion. However, if you have got an applicant who's got a debt management plan, we don't also have a minimum amount of time that they need to have been in it. But we will ask that if they've had it for up to 12 months, they've maintained the conduct satisfactory. If they've had it for 2 months, 3 months, or however long, again, it doesn't matter. As long as you can showcase that they've maintained it satisfactory for however long they've been in it, we don't have any issues with it. Now, one thing I do need to kind of mention here is that any defaults that have taken place as part of the DMP, we will count them towards the maximum of 4 that you can have in the last 3 years. So that's always an important one to remember. Moving on, so IVAs and bankruptcies. So again, these are a few nice little bits of criteria here that are Sapphire exclusives. On paper, you'll look and you'll see that it says we do require 3 years discharge for IVAs and bankruptcies. Now, if you was to have an application, we've got someone who's either in a current IVA or up to 1 year's discharge from bankruptcy. Again, if you look directly with us, you wouldn't be able to place it. But if you reach out and speak to Impact, then those guys have got access to our criteria, which enables us to take those cases from you now. So we will look at current IVAs, so long as they're cleared on completion, and up to 1 year's discharge from bankruptcy. Now, before we go any further, I also just want to talk a little bit about this. So all our criteria that I've kind of been through here and everything else that I'm going to kind of carry on with on the adverse front has to apply on completion, not at application. So when we're talking about, an applicant who potentially has, let's say 8 months discharge from bankruptcy, and they're very fortunate, they want to buy a property, they've come into a bit of money, we're going to look at that and go, well, you're going to look at that potentially and go, right, I need 12 months. He's only got 8. He's only been here for 8 months. It's just been discharged. I've got to wait 4 months. You can actually bring that case to us now and we will offer it, and we'll just set the condition that you can't complete until it's within our adverse criteria. So that's how it works with the default, CCJs, DMPs, however you want to play it. As long as it meets our criteria on completion, then we're quite happy to look at and offer these cases. It works fantastically well for people in kind of a new build space, especially where there's kind of tight time constrictions and things like that. So again, anything that you've got, as long as it's going to be within criteria on completion, we're quite happy to look at.
And to be fair, the team have sent over quite a few emails to your team. They come back very, very quickly with exceptions and updates or times if they can't do it today, when they can do it in a couple of months' time, which is really good.
Exactly. Yeah.
Really helps us out.
Yeah, that's always something you kind of guarantee to get when you work with us and Impact as well, is the clear communication. If you've got a case and we're not quite sure when it's going to be possible, as Dale mentioned, they'll fire it across to either myself or some other people on the sales team, and we'll go, right, you can't do it now. 3 weeks' time or in a month, 6 months, that's when we can look at it. This is what it's going to look like. So again, the clear communication is fantastic. Moving on, so mortgage arrears or missed mortgage payments, missed secured loan payments. Now this is kind of I like to think we've got a very unique and attractive proposition when we talk about what we've got going on here. So again, on paper, we say no missed payments in the last 12 months. However, we can look at up to 4 missed payments in the last 13 to 24. Now, again, as I've already mentioned, that's got to apply on completion. So if you've got someone who maybe missed a mortgage payment, again, kind of 9 months ago, delay the completion until it's within the last kind of 13 to 24 months, works out perfectly. Or again, if you've got someone who went for a bit of a bad patch, just delay the completion so all those kind of missed payments will drop off and eventually you have none in the last kind of 2 years and you get our best product. A few other things just to bear in mind here when we talk about kind of mortgage arrears or missed secured loan payments, missed mortgage payments, is that we don't care what the status is on the credit file. It is truly when the last time they missed a payment was. So to give you a bit of an example, if you had someone, say, who was a self-employed builder, perhaps, and let's say 2.5 years ago, hurt himself at work, wasn't able to work, went status 1, 2, 3, 4, and then has stayed at status 4 since then, and hasn't quite caught up yet, but he's making all the payments on time. As far as we're concerned, we're only going to look at the last 24 months. And because he was at status 4 before he got there, we don't care that he's currently on a status 4 now. As far as we're concerned, there's no missed payments there because we're not looking at what the credit file says. We're only looking at when the last time they missed a payment was. And that works exactly the same way for secured loan payments as well. And the last thing here as well that I want to talk about is we're really good at differentiating between what we class as a late and a missed payment when we talk about these missed mortgage payments or missed secured loan payments. And the way we look at that is if you've got someone who, say, for example, their payment's £500 and their payment's due on the 1st of every month and they've missed it for, say, the 1st of June, but they pay it before the 1st of July and make their July payment, as far as we're concerned, that's only late, not missed, and we won't hold it against them.
That's good.
Yeah, it's showcasing the flexibility that we've got to help people. And last, but by definitely no means least, on the adverse credit side of things, unsecured. So we say, again, on paper, no more than 2 missed payments per credit agreement in the last 6 months. Now, again, we can delay the completions to make sure that an applicant who maybe is, say, gone 1, 2, 3, 4 and is now back on track, delay the completion for 2 months, and we'll be absolutely fine. If they've got quite a lot of kind of recent adverse or missed payments and things like that, this is always a really good example. And touching on what Dale said earlier, is if you contact us, or if Dale will contact us directly about what we're looking at, we can say, right, well, we can bring these ones up to date, or we can delay the completion for this long, and then we can give you an idea as to as and when we can look at these types of cases for you. And also, we have kind of just gone whole of market with our payday loan criteria as well. So if you do ever find yourself with any kind of payday loan inquiries, feel free, again, to fire them through to Impact and get our other kind of specialist guys as well. And they're quite happy to talk to you guys through it. Moving on. So next is our contractor policy. So not just kind of the complex credit world that we're involved in, also kind of some of the other more interesting types of employment and incomes as well. So one of the things we always like is contractors. Now, most of this contracting criteria that I've got here for you guys is based around day rate contractors, but a lot of it would apply to kind of our fixed term contractors as well. But again, Dale and the team here are more than happy to talk you through anything that you've got if you do have an applicant who's got, say, a fixed term contract inquiry and a lot of adverse and stuff like that. So let's go through kind of the day rate contractor piece. So we will take day one contracts for day rate contractors, so long as there is a history of working in that industry. So we usually say up to kind of, we want about 2 years worth of industry experience, but we do a lot of exceptions as well. So depending on what the scenario is, send it through to Dale and the team, and they'll be able to pitch it towards us, and we'll tell you what we can and can't do. So from an affordability point of view, we work from the day rate times 5 times 48. As far as I'm aware, that's probably one of the leading ones. I know there are a few out there that do 52, but we're slowly getting there. And also minimum of 3 months remaining on the current contract. So that is at completion, right? And if you've got someone who has got a contract extension, a new contract lined up, or they've got a letter saying they're going to be working for a little bit longer, that's all fine. We're quite happy to take all of those as long as it will confirm that on completion, there is at least 3 months remaining on the current contract or a new one or whatever else they've got moving forward, which is great. So also any contractors you see who are kind of contracting via their own limited companies and pay themselves a salary and take a dividend, a lot of them, in most cases, won't be drawing down as much income from that as what their contract is actually providing them. So we're quite happy to ignore limited company setup. If you've got someone who is contracting via their own limited company, again, quite happy to work from the contract rate rather than the self-employed element that they've got coming through themselves. And big one for us is gaps of up to 6-month contracts accepted as well. So when it comes down to kind of day rate and fixed term and things like that, if you've got a 6-month gap, we're quite happy to take a view on those. And this can be over a 12-month period where if you've got someone who's had, say, maybe worked 4 months, taken 4 months off, worked another 4 months, anything like that, that works rather than just a 6-month gap as a whole. But all kind of good stuff there. Now, a few other bits and pieces while we're on the subject of contractors. So we are seeing a lot of people kind of going via agencies and 0 hours contract and things like that. So again, on paper, it will tell you that we can only take these if they've got 2 years history using either a 0 hours contract or via an agency. But again, if you speak to Dale and the guys here, a lot of the time we can look at doing exceptions for them if they've been doing it for a minimum of 12 months. So you don't always need the 2 years history, but we do assess these on a case-by-case basis. But again, these ones definitely fire through Dale and the team. And moving on to self-employed. So I always really liked our self-employed policy. I always thought it was probably one of our more flexible elements and not just kind of the adverse side of things that we do as well. So for us, we ask for a minimum of 12 months trading. So that is 12 months trading either as a limited company, in a partnership, sole trader. As long as you've got 12 months trading history, we're quite happy to look at these applicants. Now, while we're on the subject of that, we do always ask for kind of the last 3 years income proofs. However, if you don't have it, that's fine. Just give us whatever you've got, and we're quite happy to work with those. Now, a few other bits and pieces that we do here, which is always kind of, again, showcasing a lot of the flexibility that we've got. Capital raising for business purposes, big focus on kind of self-employed people. We're quite happy to work with applicants who need to capital raise for a business purpose, whether this is kind of expanding their location, if they're kind of buying new equipment or anything like that. Again, always quite happy to look at these. The only thing we won't do is kind of float the business if it's struggling or it looks like it's going under. We won't give them money to remain in work because, as I'm sure you guys will appreciate, that's not what we do. Now, while we're on the topic of kind of remortgages and self-employed, capital raising for tax bills as well. So we are always happy to consider applicants who need to capital raise to pay off either a full tax bill or a portion of it. Again, so long as we've got an understanding as to why the applicant is in that scenario, and what they've got kind of in place to stop that happening again. And to give you guys a bit of an idea to what we've done previously, we've had people who have unfortunately been very, very ill and haven't been able to kind of pay their kind of tax bills, people who might have been stitched up a little bit by a previous business partner, and even some people who have actually done far too much work effectively as a self-employed person, made more money than they was expecting and didn't have enough kind of money put away to actually pay their tax bill. So again, as long as we get comfortable and get an understanding as to what's happened, what's going to stop that from happening in the future, we're quite happy to take a look at those. And lastly, so I have mentioned previously that we always ask for the last kind of 3 years worth of income proofs, but if you haven't got it, we're going to work from whatever you've got. Now, what we've done recently is we've basically built a COVID repair self-employed policy. And what this was is we always said we work from the latest year's income. So we never take an average, even if it's increasing or decreasing, there's no average ever taken. It's only ever the latest year's. However, because so many people were impacted by COVID-19 and they weren't able to work and it was very stop-start for them, a lot of people's previous year's figures have been impacted quite badly, and it's not a true reflection of where their business is at now. So at the minute, we have a piece of policy in place, which means that if the most recent year's tax figures or self-employed income figures that you've got aren't amazing and what they're working on currently is a lot better, then we can actually work from basically what they've been doing, what their pre-COVID figures were, and we can assess it on that basis, so long as you can provide evidence via bank statements, usually the most recent 3 months, that the applicant's business is now trading at what its pre-COVID levels were. So again, to make it very clear for you guys, if you want to use figures from pre-COVID, you can, so long as the applicant is now back on track and earning their kind of pre-COVID levels of income.
So 2019.
Spot on. Yeah.
And upwards. That's good. That's cool.
Yeah.
It's really good.
So we can always look at these. So obviously as time moves on and we get closer, as the end of the tax year finishes, we obviously have to move on. Yeah. But at the minute, any questions along those guys, again, fire them through to Dale and that, and the team there is more than happy to.
Very accommodating, that.
Yeah. Well, we like to be. We try and be flexible.
People need help, absolutely.
Yeah. And, as we kind of touched on a little bit earlier today already, like the cost of living is going up, and the flexibility has to be there. And Bluestone wants to be at the forefront of that. And we want to do that with our partners and members of the Sapphire Club like Dale and Impact. Right. Moving on. So for those of you who want a little bit more education about kind of, if you're new, especially if you're new to the adverts, we do have a few bits and pieces for you guys to actually look at on our website. I don't want to teach anyone to suck eggs, but if you are new, then we do have guides on how to read a credit report, hints and tips for packaging. Again, this makes things really easy for when you do speak to Dale and that, because you'll know exactly what kind of documents they're going to be asking for. And that way, as always, you can see that what you're being asked for from Dale and the guys at Impact is relevant to the case, and they're not going to ask you for stuff just for the sake of it, because you'll be able to see exactly what type of things you're going to be looking at. And we've also got some CPD videos. Again, most of them do star me, so if I didn't tickle your fancy today, I wouldn't watch them. But there are plenty of CPD videos that we've got either now and coming out in the future as well, and all around little bits and pieces around kind of complex credit, what's kind of happening in the world at the minute, and a few more on different bits of criteria.
That's useful, because most of my guys are targeted on day one offers. So the quicker we get everything correctly to you, the quicker we're going to get an offer out, and it's better for all parties then.
Yeah, absolutely. Absolutely. Because all we want to do is make life easier for everyone. And at the end of the day, there's a customer at the end of it, and that person is the person who needs our support and help the most. So if we all work together, we'll get there as soon as possible.
Brilliant.
Fantastic. And then for anyone else as well, if you want to keep up to date, we are on LinkedIn. We do kind of recommend that you guys follow us on LinkedIn and Twitter. We have just launched an Instagram page as well. That should be relatively exciting for you guys as well. And that's the best way to stay kind of up to date with all our new kind of products. And when we do release new bits and pieces and it goes through to the Sapphire Club and stuff like that, that's where you'll probably hear about it first. So highly recommend you guys look at those bits and pieces for us.
Excellent. Thank you for that. So let's take the slides off the screen. So let's talk about 6 times income product.
Yes. So we're really kind of pleased to announce that we're going to be releasing a 6 times income multiple product. And again, as we mentioned earlier, it's going to be exclusive for you guys and members of the Sapphire Club. Awesome. And it's kind of in aid of kind of helping, especially first-time buyers and people who maybe have been impacted a little bit by what's happened over the past couple of years and what's kind of happening in the world at the moment. Yeah. Because previously, for those of you who are slightly familiar with us, will know that we only do 4.5 times income multiple. So what we're going to be looking at doing is we're going to be looking at producing a product which will enable the applicant to potentially go up to 6 times income if their mortgage payment with us is going to be up to 90% of what their expenditures are at the moment. So for example, if you've got someone who is renting and their current rent is £1,000, as long as the mortgage payment with us is going to be below £900, we'll look at taking that person to 6 times income. Okay. Now, the reason we're looking at doing it that way is because, as I'm sure lots of you people would have seen this with some of your applicants, who may have even experienced it yourself. If you're paying rent somewhere and it's going to be more than what your mortgage payment's going to be, then is that really fair to say that you can't afford it, or you can't have that much money because it doesn't make financial sense for that person to have that, despite the fact that you've already showcased that you can pay everything. So that's the reason why we've done it. And that is going to be coming out very soon. And again, as we've kind of mentioned, that's going to go out as an exclusive for Dale and the guys at Impact and a couple of other members of our Sapphire Club.
Excellent. Look forward to that. Look forward to sending that out on our e-shots. So keep an eye out for those shortly. So while I've got you, what do you think about the rest of the year? What's going to happen? What the volume is going to be like?
It's a great question. So it's a hard one to answer, really. The mortgage lending was down, I think, in April. But we've also got that period now where with 2 years since kind of COVID was a big thing, there wasn't anything happening in the purchase world, but there's lots of remortgages. So we're still seeing lots of kind of remortgages going on. So I think that area of the market is going to be really busy. Obviously, with Help to Buy coming to an end, there's going to be a bit of we're probably already kind of getting to the end of that part where there's a mad rush of people trying to secure those kind of new build bits and bobs. But also, I also think we're going to see a slight slowdown just due to what's happening with expenses. We got ONS figures all went up. I'm sure lots of people are probably impacted by that. We've got gas prices or petrol prices increasing. It seems to be daily. Sure. And with the swap rate increases as well. I mean, I can only really foresee kind of mortgage rates going up, and that is going to make lending a bit more difficult for people. However, that all sounds very doom and gloom, but there's always going to be people who want to buy houses. There's always going to be houses for people, to purchase. All it's going to mean is that people's circumstances might get a little bit more, I don't want to say the word tricky, but a little bit more non-vanilla. And that is exactly kind of where us and people like yourselves will come in to really help those customers. If you've only ever really been dealing with people who generally go high street, you might find that this is going to be a really exciting time for you guys to kind of expand your knowledge on what happened, how to place cases.
That's a really good point. Really good point. I think that the rest of the year, from our point of view, is just opportunity. Right now, people are going to unfortunately struggle, and they're going to need help from lenders like yourselves and specialists like ourselves to get there. But like Mark said, if you've only been dealing with the high street before, now's the time to get into the specialist side. Seek out our have a chat with our guys just to seek out what we can offer and how we can help your customers. So we're just running out of time. Last comment to you: what do you advise of brokers to do in the coming months? Another great question. I tell you what, you've prepared. What would I advise brokers to do in the coming months? If I was you, I'd move quickly.
rates are changing very, very kind of rapidly across the board in all areas. If you've got a customer who's found something that they like, I think it's important to make sure that you tell them as kind of quickly as possible that today the rate might be 4%, or if it's a high street like 1.5% or whatever. Next week it could be 1% higher, 1.5% higher. If you like it and you're ready to go, to try and get the customer to move as quickly as possible. The other thing I'd probably say is, we kind of touched on it already, but look at expanding your client base. Look at staying on top of all the development and what all the lenders are doing, not just from a rate perspective, but criteria. Because the more you learn, the more people you can help. And again, once you know where you can place these cases or who can help you, like you guys there, one, your life's going to get a lot easier. And two, everyone's going to be so much more appreciative. Everyone knows that word of mouth is probably one of the most powerful things to grow your business. So if you can help someone who's in a bad situation, and you help them with us or with Dale, however you do it, that person's then going to tell the next person who's in a situation like that. And all you're going to do is become a bit of a powerhouse in that area, in your local area, or however you do it, and be well known as like a problem solver or someone who can help people. And for me, just education. So, get your customers to move quickly and yourselves move quickly. Get everything ready. When you've got a case, you send it into Dale. They're asking you for the documents. Stress how important it is to get that, to secure that rate. And secondly, just learn, become a sponge, absorb everything you can. And if you do that, I'm sure everything will be smooth sailing for you moving forward.
Brilliant. What a way to end. Very, very good advice. Thank you, Mark. Thank you for coming in. Really appreciate you watching this one. There'll be some more Impact Insights coming soon. In the meantime, keep well and stay safe. Many thanks.